Hi, yes, it's that time of week again. We're going to have a look back at the main stories that have impacted the markets in the last sort of 5-6 days. And where else to start but the British pound. Now, we were talking last week about 20-year lows and we thought that was pretty bad. But last Friday's session closed at a 37-year low. In fact, the economy at the moment is very reminiscent of the bleak times in the 1980s. Inflation over 18%, sky-high interest rates, industry falling apart. This obviously wasn't helped by some figures that were out last week. The retail sales figure was down 1.6% in August. That's a downtrend that's been happening now since summer 2021. And I think provides a glorious illustration, or not so glorious really, that the British public is pretty much cash-strapped as things are. Of course, the inflation concerns, the energy crisis, they're at the forefronts of everybody's minds here in the UK. In fact, the Bank of England raised interest rates by 0.5%, 50 basis points just today. The US increased their interest rate by 75 basis points yesterday. We did have a bit of good news in that the UK government is going to cap energy costs over the coming months for the majority of homeowners, and also a shorter cap for businesses. But at the moment, this doesn't seem to be helping the pound, which is currently trading around the 1.127 mark. Again, it's a tough time for the British pound. Volatility abounds. Will a slightly more gentle increase in the interest rates? We were thinking there was going to be 75 basis points in the UK. Will that help? Who knows? Certainly worth keeping your eyes on the great British pound over the coming days and weeks. But another major story that's broken this week is the potential of a Russian mobilization. And what sort of impact is that going to have on the markets? So Vladimir Putin announced partial mobilization just yesterday. There's 300,000 people now going to be called up to fight in the Ukraine. And unfortunately, there was talks and threats about the usage of nuclear weapons, which is obviously a grave concern to everybody. But what impact do you have on the markets? Well, shares of Russian companies on the Moscow exchange fell on average about 9% after that announcement. And the ruble was in fact up against the US dollar. There seemed to be less impact on global markets, with European futures apparently not taking too much notice. Now, whether that's a case of this is an ongoing situation and we're hearing a lot of rhetoric, or were traders more focused, for example, on the Fed announcement yesterday, where we saw a rate hike of, as I've mentioned, 75 basis points. Oil was relatively calm, as was gold. In fact, gold, we're looking at lowest levels since the start of 2022. Could these lower levels attract some safe haven investing? Who knows, but it's certainly clear that the situation between Russia and Ukraine is not going to go away. And once we look at the energy markets, etc., it is definitely having a form of impact on global markets. Okay, now it's time to turn our attentions back to the other side of the Great Pond in the US. And is there complacency starting to creep into the US stock markets? At the end of last week, we saw quite a collapse in US stock indices, which was a bit of a surprise as many people have been commending the US economy for its relative strength, certainly compared to, the UK and certain European economies. There's been some grave predictions. We touched on these last week. The S&P could fall another 22% this year. The chief investment officer at Morgan Stanley stated that complacency abounds in the market. There's considerable downturn in tech company IPOs, for example. It's been 238 days since the last tech IPO of over $50 million. That's the longest run since the crash of 2008 and the dot-com crash back in 2000. Why would that be? Well, obviously there's a lot of talk about US dollar strength and the fact that production is okay over in the States. But inflation and interest rates issues continue. Now, the tech-dominated NASDAQ composite is down 28% this year, whilst the S&P is only, and I use that term loosely, down 19%. So a lot of analysts are talking about there is further to go for the S&P. Adding the fact that the UK looks to be in recession based on some of the comments coming out now, and that is a fear for all Western markets. So has the strength of the US dollar and US production levels led to this creeping in of a little bit of complacency about the strength of the US markets? We're going to have to wait and see. Certainly analysts are talking about further downsides. Right, our last stop on a whistle-stop tour of the global economies is going to be Japan. And is the yen back on track? Now, Japan's beleaguered economy has been relatively quiet on the global news scene over the last couple of years. And in fact, in 2020 and 2021, it was applauded for its business-focused approach to lockdowns, keeping business going, keeping production up, whilst other countries were locking down the whole population. So you think, great, that's a basis for a little bit of strength. But things are never that simple. The economy's not in great shape and hasn't been for some time, truth be told. In fact, so far this year, so started 2022 to last week, the yen was down 24%. No doubt there is increased competition in Southeast Asia for electronics and precision engineering, these are the sort of sectors that have led Japan to be a big global player over the years. And with the reopening of these economies and their production starting again, that is clearly having some sort of impact. Tuesday saw a 6-day high of 144 though, against the US dollar. Again, are we looking at a little bit of strength? And in fact, we're looking at it this afternoon. We're looking at around the 142.3 mark. This has led to a little bit of confusion or a little bit of lack of certainty now on Japanese intervention to support the yen. Some analysts are saying, actually, we don't think it will happen. Some are saying we perhaps won't see anything now until the 150 mark. And maybe this boost can continue with the UK interest rates going up 50 basis points, the US interest rates going up 75 basis points this week, while the Japanese government and the central bank is keeping a relatively soft touch approach. So, could the yen be back on track? Or could this just be a little bump in the road? Again, as with all markets, keep looking at them, keep studying, and be safe in your trading. Many thanks.